All right, what's up, everybody? How's everyone doing? Good, good. Who's got the first question? Let's kick things off. Well, what does that mean? Like, guys, I can try to do my best to enforce standards, but unfortunately, it's up to people to follow the rules. Like, we've made it abundantly clear multiple times that we can't fix people's problems inside the chat, right? So if people don't understand that, that's a them problem, not a me problem, as much as it is. I think there's a tremendous amount of value in being able to have discussions during the trading day about our trading. Cutting that off for people because we have a few selfish pricks isn't fair to other people. And like, it's so obvious at this point, right? That if you send an email, we will get your issue fixed. If you just throw shit out into the universe, nothing good is going to happen. So it's not fair punishing people for that. And like, we've all accepted the terms. We're all asked to accept that pop out. If I have to get people to accept it every single day, I will. But you can set the rules, but it's up to people for compliance. And I don't want to cheat people of an opportunity to learn and ask questions and have legitimate trading concerns answered during the day. That's extremely valuable. But at some point, there has to be a realization that, you know, if we got 250 people trading, it's kind of bullshit to think, hey, let me get Michael to stop, fix my problem, stop trading, pause everything for the other 250 people watching just so I can get my problem fixed. Probably not fair. And there's nothing I can do about fixing that mentality besides not rewarding that behavior, right? So it's kind of pathetic that we have to treat people like dogs. You do get a treat if you do something good, but unfortunately, that's where we're at. Would love to use this time, though, to talk about some real trading problems, right? Or trading questions for people. I don't want this to be a rehash of a frustrating day. So 2-min candle at 408. Yeah, that's fine. That'd be a reasonable active setup trigger. Nothing wrong with that. Doesn't make a higher high above that confirmation high. There's nothing wrong. Failed breakout, increasing outlier volume, strong candle shape. There's nothing wrong with that whatsoever. 3-min. That trading view annoys me sometimes. I would say the 2-min looks better than the 3, right? Because you don't have ever any increasing outlier bearish volume until you get that separation on this 1418 candle. And at that point, it's a bad candle shape. So only a setup there on the 2-min time frame. Well, generally, like if I'm on the 2-min time frame, I'm not doing any multi-time frame analysis, right? So I'm not looking to see if there's a conflicting narrative on the 3 or the 5 or the 10. If I have a setup on the 2, it's independent to that time frame. If I'm looking for confirmation on something and it doesn't give me the look that I want, then I'll switch to a different time frame and see if it gives me that opportunity. So it's only if I feel like I'm missing information will I switch to another time frame, but then I'm resetting that entire process, right? So I'll still need a valid setup trigger, a valid confirmation, right? And valid risk reward to justify that entry. I want to avoid scenarios where I create easy opportunities to create analysis paralysis, right? There's always a reason, a smart sounding reason to not take a trade or a smart sounding reason to take a trade. So I want to avoid as much of that noise as possible. You can find any time frame, any combo of indicators to tell you that your idea is wrong or correct, and all of that is just noise. So I want to focus in on the things that actually matter and not complicate my process unnecessarily. What else we got here, team? Well, what was your setup? Walk me through your process. So what's your setup trigger? Take it step by step. Okay, so did it make a lower low? Yes. Did it close above that lower low? Yes. Okay, active setup. What's confirmation? Okay, but just barely is not the standard, right? It's a yes, no. Is it increasing? Yes. Is it outlier? Yes. So what would be the confusion there, right? Everything ticks all the boxes. It's not just barely, it's a binary, right? Either it is or it isn't. Barely's got nothing to do with it. What else we got here, team? Yeah, there should be an import option that's available to you now. Worked on that over the weekend. And you just go into your trading history and export that data. If you have any issues with that specifically, raise a ticket with Volumetrica, and I'm sure they'll help you do it. Well, the trade, right? I closed it because my stop loss location was incorrect. So the move dipped and then pulled back, and where my stop loss was actually 2 points or 3 points worse than what the actual low of the candle was. So I closed it because I had a broken execution rule. It wasn't because my thesis was wrong or correct. It's because I broke a rule. So I wasn't judging myself based on my P&L. I was judging myself based on how well I followed my process. In that circumstance, I didn't follow my process particularly well, so I closed the trade. I'm not interested in compounding mistakes, right? If I'm in a position and I broke a rule, the probability of me breaking another one, holding on for too long, ignoring an exit signal, whatever, the probabilities of that increases 1,000%. So it's easier for me to make that decision before I'm confronted with making a mistake. So like if my risk management is wrong and I made an execution error, I'm probably going to do something stupid. So why let myself do that? Dude, if I wouldn't have followed the rules that were set out for me, I would have been fired. So yes, I had no choice, right? I either wanted to keep my job and have the prestige of being a hedge fund trader, or I wanted to go work in back office and be some simp for some other trader. I didn't want to do that. So what choice did I have? You know, people talk about discipline as like this holy grail, but being disciplined is as easy as being undisciplined. You're just choosing to reward a different dopamine structure. All right. My risk when I started out trading was losing my job, not losing my money. I didn't want to lose my job. Like, I think oftentimes people give themselves too much permission to behave in ways that aren't actually good for them, and then use terms like, oh, I'm disciplined or undisciplined as a boogeyman. Trading is binary. I either did the right thing or I didn't. Doesn't need to be more complicated than that. You know, the other thing that confuses me a little bit, so guys, I try to do the same thing every single day in my trading, right? So it's not discipline, it's muscle memory. And that's like why I'm like, Dave, I'm sometimes confused by your questions, because like you're looking for things that you've never seen me do. And then you're like asking what I would do in those scenarios. So it's like we're inventing problems that don't exist and then suffering when we encounter those problems. So my pre-market prep, right? I use the 3-for-3 pre-market prep system. So I'm looking at three things, right? What was the previous daily candle? So today, right? Monday, what was Friday's candle? What was Friday's volume? And then what's today's price action? If I have a strong candle, strong volume, and today's price action is telling me the same thing, then I'm saying that I have trending markets in that direction. From there, these numbers are basically just the pre-market high and then previous daily highs or previous daily lows rounded up to the nearest round number. And then if there's a gap, like, right, so pre-market high today, let's say was 400. and yesterday's or Friday's high was 800. Well, it's not going to move from 400 to 800 in one go, so I just fill it in 100 points along the way. On ES, I fill it in every 10 points. It's a binary, right? It's a yes, no. So did it make a high day? Yes, no. Doesn't matter if it makes it by a tick or 20 ticks. It's a yes, no. Again, we're inventing problems that don't exist, right? Either it makes a high a day or it doesn't. In this case, it didn't. So even though the market moved maybe the way that you wanted, it's irrelevant. It's random. Could have gone the other way just as easily. So it's like, I don't get why we apply our perception to a binary decision. You're not smarter than the market. I'm not smarter than the market. No one is. So why do we impose our belief system onto it when it doesn't care? Right? Just makes life harder for ourselves because we create patterns that aren't repeatable. And when we have patterns that aren't repeatable, then our P&L is not repeatable. Close enough is not good enough. The spread is the difference between the bid and the ask, right? So if I were to bring up my paper trader here. All right, guess not. Okay, see that little number in the middle there, right? See how there's a difference between the buy and the sell price? That's called the spread, right? So if the spread is wide, that tells you a lack of competition for prices, right? It means price discovery is not particularly efficient. If you have a tight spread, then it means price discovery is consistent and it's efficient. So when you buy something, right, you're not buying it at 29,081, you're buying it at 29,8150, right? You're buying at the buy price, not the sell price. This is how market makers make their money, right? It's what they charge you for facilitating the trade, for matching a buyer to a seller. And so where the spread comes in, or where it hurts most people, is they will set their stop loss price or whatever. And because they're using a market order, they'll trigger it, right? Once it hits 81.75, when they actually want to get stopped out at 81, right? And so they pay that 3/4 of a point premium to basically get out of their trade in time. So you add the spread to your stop loss to account for that. So you get stopped out at the price you want. Right? And bid is buy, ask is sell. So sometimes those terms can be the same or different, however you want to use it. But it's the difference between the buy price and the sell price. I mean, generally, if the spread is more than like a point, you're starting to get into some pretty funky behaviors or pretty low liquidity environments. But generally, it wouldn't prevent me from trading. It would just make me add a bigger buffer to my stop loss, right? So instead of a stop loss being at 80, it would be at 79, right? To account for that 1 point spread. There's pros and cons here. So don't overthink it. You have to decide what you care about most, right? Do you care about getting out right away, or do you care about getting out at the price you want, right? And there's pros and cons to both. I use limit orders. So you just got to figure out what pros and cons you want to use and then be consistent in your process around that. Made lots of videos on stop loss techniques to avoid getting faked out. And those videos explain how to manage your spread effectively when you're in a position. But I would say for a vast majority of people, they're trying to big brain it and they're trying to solve for an exception, right? If it's within 3/4 of a point of my stop loss, 95% of the time, I'm going to get stopped out on that trade too. Well, markets are the regular trading hours are closed, but futures trade 23 hours a day. These are called electronic trading hours, right? So if I were to change my session to electronic, you can see the blue tint here. This is the pre-market or overnight price action. I don't trade that, but you could if you wanted to. Okay. So you lost 7 points instead of losing 10. What are you complaining about? Yeah, I don't really pay attention to the pre-market price action or the overnight price action. It's very low volume. It means nothing to me. So then you didn't get filled halfway down your stop zone, right? Your entry zone. Oh, sorry, I misread your question. Yeah, best way to start trading with me, purchase a prop firm account at daytraderfunding.com. Link is in the description. You'll get access to my community during the course of your evaluation. You'll be able to trade with me during US market open. And so, Dave, if you get filled outside of your entry zone, close the trade, right? Exactly like I did here today. I had an execution error, right? Where my stop loss was incorrect. So what did I do? I didn't hope I got lucky. I got out. You don't have to suffer if you make a mistake or you don't get a fill at the price you want. You can just get out. Just because you clicked submit doesn't mean you have to be pot committed to that idea forever. And closing a trade when you've realized that you made a mistake is a lot cheaper than getting stopped out for 20% more than you expected. Judge yourself on the quality of your process, not your P&L. If you compromise on your process, you're going to compromise on your P&L. And tough luck, man. Shit happens. I think people always gravitate to trading at all-time highs, right? Famous quote around like the 1928 stock market crash, right? Black Monday. The Kennedy father, he was like, I started getting stock advice from my shoe shiner. But there's nothing wrong with trading volatility. I actually prefer trading when markets are this volatile. It gives you more opportunities. So it just really depends. And like I spent, my call it institutional career. The big event I dealt with was Brexit, which is, the UK leaving the European Union. There was a tremendous amount of political upheaval then. There have been more politically volatile times than we've had now. So I think everything always in the moment looks as if it's the scariest or the craziest, but price doesn't lie. It always moves in the path of least resistance. You just got to find it. I honestly don't read the news that much. I don't really follow what's going on in the world too much. Even if I tried, I just end up reading sports news in the morning. So I don't care. All I care about is price and volume. That's what tells me the market's going to do. I don't care if it's overvalued or oversold. I trust my candlesticks. I trust my setup triggers. I trust my risk management. That's what makes me profitable. That's what makes me money. Everything else is just noise. I don't trade the news, so I don't care. Yeah, like it's just noise, right? Like it's so easy. I've seen it a million times, especially with earnings, where it's like earnings will report top line and bottom line beat, right? So they'll outperform on revenue and outperform on earnings per share, and then still gap down 20%. So the funny thing with markets, right, is that news is always priced in, and it's always priced in hindsight. So, who cares, right? When I back test my strategy, when I stress test my results, I'm not thinking, oh, like today was a CPI day, or today was Trump tweeted about tariffs, or like whatever, right? My back test doesn't care about that. So why should I? Why should I now start to invent things that weren't accounted for in my initial results? Again, it's just finding a smart reason or smart sounding reason to break your rules. The number one rule of systematic trading is you don't break your rules, even when it sounds clever to do so. So why torture myself with clever sounding reasons if I don't have to? Well, when I don't trade over news, right? Like if I have a 10 a.m. news drop, it's purely because I know I'm likely to get faked out in that scenario, right? So if you're going to introduce random volatility that you weren't accounting for while you entered the trade, you set yourself up to basically get punished. Yes, I don't trade anything outside of the hours that I trade. I spend all my other waking hours answering people's tech problems and working on my business. I would much rather trade all day, but unfortunately, I have zero evidence to indicate that trading all day actually makes me any money. So I torture myself with other projects. And yeah, I don't care what like the data is. I care about what price action tells me after the data, right? So if the news is strong and it's supporting the path of least resistance, I'll see strong buyers or strong sellers show up, and I'll be able to catch that trade 2 minutes after the news drops, not 2 seconds. And that's fine by me. The way that I look at it, right, is I'm trying to be greedy here. I'm trying to take a bite out of the juicy middle, not just eat the crust. Well, I trade one concept, right? I trade the opening range breakout. On the opening range breakout, I effectively have 3 setups in each direction, right? I've got the breakout through the opening range. I have a breakout through high of day or low of day, or I have a reversal back towards the opening range. So it's 3 concepts, 1 technique, or 3 setup triggers off of 1 concept, however you want to look at it. And the other thing, Bella, right, is a lot of prop firms, a lot of trading companies, whatever, they will not honor your payouts if you're basically trading news events, right? So a lot of news trading is banned, which means that you're not allowed to open position a minute before or a minute after news drops because they're trying to protect themselves from volatility. So I don't want to put people in situations where they're getting payouts that are getting rejected. That would suck, right? So, there are some restrictions that eventually come into play, and you have to be practical about them. What else we got? Any other questions? What changes? Oh, my pleasure. Try to do these Monday through Thursday, right? So Mondays, kind of right after market close, 4:30 Eastern. Monday, Wednesdays, 4:30 Eastern, 1:30 Pacific. Tuesday, Thursdays, we do a DTR after dark. And we do those in the evening, so 5:30, 8:30. Dave, and the same thing I have, same advice or feedback I have for you always is you overcomplicate your trading unneedlessly, right? And then you create for yourself analysis paralysis. You need to systemize your process and turn it into muscle memory instead of looking for smart sounding reasons to take trades or avoid trades. You don't know better. I don't know better. So all we can do is trust our system and follow our rules without discrimination. The number one rule of systematic trading is that you don't break your rules. If you're picking and choosing when to apply them, that's just a fancy way of saying you're breaking them. I have no intention of launching my own trade copier. I already have enough tech problems as it is. I don't need another one on my plate. But no, I don't have any intention of doing that. Hopefully at some point here, we'll have a TradingView integration. I'm waiting for the onboarding on that. It just takes a little bit of time, but we'll get that available to people as soon as it's available to me. And so it's not that we'll be moving back to TradingView, but we'll give TradingView as an option to people. I still think that Volumetrica is a better trading platform, less slippage, better executions, nicer moving candles. You get tick by tick data, not second by second. So TradingView has got the best user experience, it's got the nicest UI, like their order window is the prettiest, but it doesn't actually give you maybe the most confidence in your executions. So scalping strategy, right? And this is the same advice I gave to MTB, PC, JTS. You got to turn your process into muscle memory. It's really easy to pass an eval because you can just punt and hope you get lucky and make good cash. But to land on tails 10 times in a row is very, very difficult, right? So you got to systemize your process. You got to figure out what actually breaks when you're placing trades. And the only way that you can find out what's breaking is if you do the same thing every single time. Like I say this all the time, but I just bitched out TradingView a little bit there, but the actual platform is not going to be what makes you profitable. Like you can build a house with a DeWalt or with a no-name brand screwdriver, right? It's not the tool that actually makes you profitable. It's all the other things. It's really easy to distract ourselves and say, hey, this is actually the thing, when that's not the reality. Paper trading, paper trading is good for a very, very small, to a very limited sample, right? Because most of trading is what happens between your ears, not what actually happens in the market. And paper trading doesn't allow you to simulate what happens in between your ears. And I've seen this happen to many people, is they'll spend 6 months, 12 months, 18 months paper trading. And then when they go back to trading live or trading real markets, all of a sudden it's like a brand new game for them because they spent the last 18 months completely neglecting their psychology. So I think paper trading is a good tool, but it's overused. And I wouldn't waste too much time with it. because you can't simulate the pressure or the feeling of it being real. Much as you'd like to, you can't. And ultimately, right, it's the psychology that changes your behaviors, which lead to problems. So it's better to trade, really small sizing in a live account than it is to paper trade. You can trade micros, 1 micro, right? You'll lose $50 a trade if you're wrong. And you'll learn a lot better. You'll progress faster. So I generally wouldn't recommend paper trading for too long. It becomes a crutch. Anything else here, team? Any other questions? So the day trader funding prop firm uses the Volumetrica platform. When you purchase your account and you click the trade tab, you'll have access to everything you need. No, my pleasure, BXT. Glad you could join. Thanks for being the number one poster here today. Any other questions here, team? We still got a few minutes if you guys want to get a few more answered. My pleasure. My pleasure, Mandy. Tech issues are the bane of my existence at the moment, but we're working on getting them fixed as best as we can for people. So scalping strategy, right? Like we just mentioned, the day trader funding platform is Volumetrica. It's based off of DX Trade, very similar to the Thinkorswim platform. And you'll get instant access to that once you purchase your account. And maybe 90 days or something like that, we'll have a TradingView integration available for people, but just waiting for that to be created. And again, buy and sell buttons are the same everywhere, right? So for me, it shouldn't make too much of a difference. It's all effectively the same. So the portfolio manager path is what we're calling the transition to trading live markets, right? So the way that it's set up here is once you have 30 green days, we have the opportunity to assess you and push you to live markets where you have fully unrestricted trading. Once you have that fully unrestricted trading, you can take daily payouts. You can request payouts as large as you want. You can request 10 a day if you wanted to. And that's what the portfolio manager perk is. So you're trading direct day trader funding capital live in the market where all your profits are paid for by the market. The objective is to get as many of you trading in that capacity, because ultimately it's much better for your payments or for your profits to be paid for by the market, right? So the portfolio manager path is that. Once you're in the portfolio manager path, then I have the discretion to either give you more capital or de-risk you, right? If you're being crazy with it. I wouldn't imagine that to be the case, but that's the whole objective, right? So the goal of transitioning through the eval, sim funded, and live path is so that we can assess your risk, put you to live, and allocate the fair number of capital for you to manage as a portfolio manager. So right now you can trade up to 5 accounts at a time, and we have a built-in internal trade copier that allows you to do that quite seamlessly. Connie, I don't see your question there. Fire it through again, that'd be great. So if she signs up, Connie, for the coaching path through daytraderfunding.com, she'll get access to all the courses. If she's your sister, I mean, I can't really prevent you from sharing the info with her or sharing the videos. Obviously, do that in good faith, but yeah, all the educational content is on DTR trading. All the day trading, right? The actual execution is on day trader funding. So if she purchases a coached account, she'll get access to DTR as well. Anything else, your team? Any other questions? Oh, you're good. You're good. And I know it wouldn't be out of a bad place. Like, I have no problem with people sharing information, right? Knowledge is power. So no problems there. So can I explain how you measure price action being too fast as it relates to execution? So good question. What that is, right, is it's a subjective, not an objective measure. Truth be told, I'm not smart enough to be able to track price in real time like that, right? Like I can't say, oh, this is moving a lot faster than 30 seconds ago. I can't do that. It's not realistic for me to expect myself to do that. So for me, what too fast means, right, is if price action is pulling into my entry zone and it triggers an emotional response, which generally means either I'm fearful that I'm going to miss the move or I'm fearful that I'm going to get stopped out, I don't want to click submit, right? So if price is moving fast and it's rushing me into a decision, I'm likely to make a mistake. So if I'm getting an emotional response, then I'm likely entering it from a non-logical or non-controlled mindset. So that is a subjective, right? Everyone's going to feel that a little bit differently. When I'm clicking submit on my entries, I'm trying to find my entry where I feel peace in my mind, right? Where I feel calm. Because when I start the trade calm, or when I start without feeling rushed or without feeling like I'm forcing something or like I'm going to miss the move, then I'm unlikely to make a mistake later on in the process, right? But if I enter a position and I've got FOMO, and that's the reason why I entered the trade, well, now when it goes against me, I'm probably going to get a little bit tilted because I was wrong on both counts, right? Or if it does go in my direction and I'm no longer missing out, right? Because I'm in a winning trade, I'm probably going to think that it's going to go longer than it actually does. And then I'll give back all my gains. So I'm just trying to avoid entries where I trigger an emotional response to that price action. If I trigger an emotional response, then price is moving too fast. If I don't trigger an emotional response, then price is moving controlled because my emotional state is controlled. So there's no subscription on the eval, right? So you have access to it as long as you place at least one trade a month. So there's no subscription there. You won't be dinged again. And you'll have access to it for as long as you have an active account, an active eval account. If you breach and you choose to not reset, then you will lose access to the DTR coaching. And that's all done automatically. Depends on your account size. I would reference all the FAQs on the website. They'll answer all these questions for you. On a 50K account, I think it's $79. All right. Any other questions here, team? Any other questions? Scalping strategy. If you go on daytraderfunding.com/trading desk and you use the coached 40 discount code, you'll get 40% off the coached path. So it'll be cheaper than just about every other prop firm that exists with no subscription fees and clear help to pass. So, if it's something you're interested in, you're not going to find a better deal. And I did some analysis here this weekend, but DTR members, right? So the people who are trading with us, they're killers. We're paying out 300% more than TopStep, Apex, My Funded Futures, Take Profit Trader, all these companies. So our payout rate is 300% higher than all of those companies, which I think is a huge testament to the quality of the traders we have inside our program and that it works. Like, I don't make, honestly, any money on the evals. I basically run this at a break even, actually even a slight loss. It's not sustainable forever, but for now it's fine. And the goal here is to find as many traders that we can push to the portfolio manager path as possible. Selfishly, I want to have 1,000 traders as portfolio managers where I get 20% of what they make. That's what I'm looking for. It's in the description of the YouTube video here, right? daytraderfunding.com/trading desk. All right. Any other questions here, team? I'll go final call for questions here. Final call for questions. Sounds good, Dave. Enjoy the rest of your day. But Dave, right? Advice for you: get out of your own head. Stop overcomplicating things that don't need to be complicated and focus on binaries, right? You need to create muscle memory, not smart sounding reasons to take or not take trades. Build your muscle memory and everything else will slow down for you. All right, team. Well, if no further questions, I'm going to kill it here for the day. Scalping strategy. Hope to see you in the room tomorrow. Get the latency-free live stream here and trade with us. But everyone else, have yourselves a great one. We'll catch up again tomorrow during the trading day and then during this call in the afternoon. And until then, everyone relax, enjoy, do something nice for yourselves today, and we'll be back at it again tomorrow. See ya.